guest, Nancy Tengler, Laffer Tengler Investments CEO and CIO. Nancy, always so great to have you. I wanted to come to you on some of your top 6 for 26. Walmart is one of them, right? This old economy pivoting to robotics using AI. Why do you like Walmart?
Oh, Taylor, it's so good to be with you, and it's good to have you back. So I guess there's a number of reasons, and it's been a favorite in our theme for the last 3 years. This is a company that's not just embraced robotics in the stores or digitization in the cloud business. I'm sorry, in the e-commerce business, but they've broadened out their exposure using generative AI in their advertising business. They also have used. They are beginning to use a number of these technologies to improve the supply chain. And so what you see is, in fact, robotics is a huge component of their ability to deliver packages quickly. So 35% of packages get to the consumer in less than 3 hours. 50% are automated in their from start to finish, order to delivery. And they just started a new program in Chile, of all places, called the Corrido list. And this is something that when you go on, it says you probably need these 5 things, and it now represents 20% of their e-commerce business there. So you also know that they moved to the NASDAQ because they now believe they're a technology company that happens to be in retail. So we love it. Dividend growth, earnings growth, same store sales comp growth. I shop there. I love it.
It was one of the most downloaded retail apps after Black Friday, which is a really strong signal in many cases for the year ahead. Talk to me, stick with technology. AMD's on your list, but it is a very far distant second to NVIDIA. Are you confident that AMD has the size, the scale, the scope to compete with NVIDIA, to be on the same stage as NVIDIA?
Yeah, so Taylor, interesting. I mean, we buy management teams more than anything else. And of course, they have to have a great product and a catalyst for outperformance. But Lisa Su, who's a distant cousin of Jensen Huang's, by the way, Lisa Su came to the company, and the company had 0% exposure in CPUs. They now have 41%. They are focused now, her next pivot was to focus on inferencing. So they have a number of chips that are solving the problem of the next stage of AI. So watch her next week at CES. I think she's going to have a lot to say. 80% data center growth, 60%, 65% EPS growth is her expectation for the next 3 to 5 years. And it's trading at a price earnings to growth ratio of 0.5 times. So think of, so is NVIDIA, by the way, but think of Tesla, which is trading at 5.5 times, another one of our favorites, but for very different reasons.
Can we talk about that? Because I'm desperate and so excited for a SpaceX IPO, for the integration further with xAI, but that means that Elon Musk is going to be spread very thin and could potentially be the CEO of multiple publicly traded companies if SpaceX does indeed IPO next year. Is that bullish or bearish for Tesla?
I think it's 100% bullish. I mean, this is a guy who described himself in the Walter Isaacson biography as programmed for war. So he is at his best when he's under stress, when he's teetering on the edge of disaster. He pulls it out time and time again. They are by far the leader in space. Like you, I am desperate for shares. So to all the desks that are going to get them, please call Laffer Tengler. We want to own that a piece of that business. And I think eventually you might be able to get exposure through Tesla, just as we are now getting exposure to xAI through Tesla. I love the narrative. I think it's one of the premier, if not the premier AI names available to investors, and it has a rabid retail base of investors that stick with the stock.
So go big picture for me here as we think about wrapping up this year, a 3rd straight year of gains. Does that bode well for momentum into next year, or do you start to think about a lot of money has been made and next year could be a down year? Your thoughts?
I think we get another year in this bull market. The last 4 days have been a little bit sobering if you're thinking about the Santa Claus rally. But if you go back to the 1990s, we had and I've drawn that analogy for 3 or 4 years now. We had 5 years of double-digit, 20% and above returns because we were in a transformative economy, and that's what we're in right now. Back then, it was just the internet. Now we just launched a portfolio. It's a thematic with quantum, robotics, space, and nuclear. So there's a lot of technologies converging, and I think will change the way we live. And certainly those of us whose kids may at some point want to take their keys away, I'll just hop in a cyber cab and, and
Me too.
enjoy my life. Yeah.
Nancy, also quick thought, a little wonky, but bear with me. A lot has been said about a bubble for the AI capex story, but net debt, and you know that's debt left over after I've used all my cash, in many cases is zero. These big hyperscalers have massive billions of dollars in free cash flow to pay off this debt if they need to, but they are still choosing to fund all of this debt rollout, AI capex rollout with debt. Is that a bubble, or are you still bullish on the AI capex spend for next year?
Well, this is what I love about your analysis, Taylor. You're 100% right. So think of the Mag 7 as 40% of the S&P and 6% of the corporate debt market. But if you go back and look at the analogy to the last time where we had transformative technology without job growth, it was the oil and gas extraction business where we went from a net importer to a net exporter. There was a ton of capex spent. Now, there were mistakes made, but I think what's important here is that these are companies that have robust balance sheets. They have other businesses and levers to pull. And, I think the Oracle issues were overdone, or concerns around debt, but that's for another time. I do think this is much different, and we will continue to see investment, just as we did after DeepSeek, when everyone was up in arms and said, oh my gosh, you can build, a great model for $5 million or whatever we were being told. Investment doubled down. Companies doubled down and increased investment. So this is a time when you don't want to be on the sidelines, not investing in the future of your business.
Nancy Tengler, so great to have you, and so happy that you were one of my final guests here for the new year. So thank you.